President Trump has once again made a serious mistake, and this time, it could cost the entire American economy dearly. Bank of America is sounding the alarm. Foreign investors are pulling money out of the United States, and what's at stake is not just billions, but up to $41 trillion. Yes, that is the total amount of foreign investment in the US economy as of February, and now a significant portion of that money may simply vanish. The most alarming part is the speed of it all. In just 1 week, $6.5 billion were withdrawn from the country, and another $9 billion in investments were put on hold. This is not just a forecast. These are real numbers, and they are getting worse. All of this is happening against the backdrop of a record national debt of $37 trillion. Imagine this. The debt is growing, while those the US has relied on for years, foreign governments, international banks, and funds are starting to back away. Why? Because trust in the United States is collapsing fast. The reasons are political instability, risky economic moves, and Trump's unpredictable trade policy. If the capital outflow continues, it could crash the stock market, spark panic in the banking system, devalue the dollar, and stall the entire economy. We could see rising prices, job cuts, and a federal government that will struggle to borrow money to keep functioning. The only question now is, how far will this go? So let's break it down. For many years, the US was experiencing a genuine investment boom. Foreign money was pouring in, international capital was flowing at record rates, and by early 2025, America had become the top destination for global investors. The total volume of foreign direct investment reached $41 trillion, an all-time high that reflected confidence in the US economy. It seemed like nothing could stop this growth, but everything changed abruptly when Trump began pushing aggressive trade and tax measures. He started threatening tariffs on everything, from copper to pharmaceuticals. Proposals like Section 899 emerged, which could impose taxes of 20 to 30% on foreign profits. Unsurprisingly, this immediately shook investor confidence. The market stalled. Those who had confidently invested in the US just yesterday began to wonder, is it still safe to keep our money here? The numbers speak for themselves. In the first quarter of 2025, foreign investment inflows collapsed to $52.8 billion. That's the lowest since 2022 and far below all projections. At the same time, the Trump administration was promising a new wave of capital. Officials and loyal media outlets claimed that $10 to $14 trillion in fresh investments would soon flow into the country. They presented this as proof that the America First strategy was working, but the reality turned out to be very different. The Financial Times and other media soon debunked those claims. The numbers weren't just exaggerated. In most cases, they had no real basis at all. What was being presented as investment was often just announcements, plans that might materialize someday, and only under favorable conditions. Some of those projects turned out to be old promises, simply repackaged as new headlines. It wasn't a capital inflow, it was noise. Experts now say that, at best, only around $2 trillion of those pledges will turn into actual money. And even the few projects that have started are now under threat. Many are being frozen or reconsidered. The reason is simple: investors are nervous. They see how the Trump administration keeps ramping up tariffs, taxing overseas income, and acting unpredictably. And in international finance, unpredictability is fatal to investment. If companies begin to officially walk away from their US projects, the consequences could be massive. The American economy could lose billions, even trillions. This would hit jobs, force factories to close, crash the stock market, and do serious long-term damage to the US's reputation as a reliable investment haven. To put things in perspective, $41 trillion is a sum large enough to crash entire industries, freeze the economies of entire regions, and shake the foundations of the US financial system. Bank of America is already warning of rising risks. Banks and investment funds are reassessing their strategies, factoring in potential losses, and preparing for worst-case scenarios. Because the very investors who once helped America soar are now seriously considering pulling out. So which parts of the US economy are most at risk? Let's take a look. The first blow will hit corporate debt and the stock market. Today, foreign investors own roughly 17 to 18% of all US stocks and bonds. If they begin pulling out en masse, it could rattle the entire market. Stock prices could plummet, Interest rates could spike, and millions of Americans could see their 401k retirement savings lose value literally overnight. Next in line is the industrial sector. It depends directly on foreign factories and global supply chains. If the investment flow slows or reverses, jobs will be on the line. This could hit states like Michigan and Pennsylvania particularly hard, where foreign companies support hundreds of thousands of jobs. Technology and biotech will also take a hit. These industries have grown rapidly thanks to international capital. But if that support weakens, research budgets could shrink dramatically. That would slow progress in areas like artificial intelligence and life sciences, potentially causing the US to fall behind. All of these developments point to a deeper issue: growing uncertainty and fading trust. International investors who once believed in America's stability are starting to wonder what is really going on. Some are confused, others are outright angry. And more of them are asking a difficult but logical question: is the US still a safe place to invest, or has it simply become too risky? The situation becomes even more dangerous considering it's unfolding against the backdrop of an already massive national debt, now over $37 trillion. For years, America has been living off foreign money. Countries like Japan, China, and Germany consistently bought US government bonds, invested in American stocks, real estate, and tech firms. This constant flow of capital allowed the US to finance its military, social programs, and consumer economy, all without a balanced budget. But now, that very dependence is turning into a vulnerability. If foreign investors begin to turn away, the government may struggle even to cover basic spending. Bank of America has already registered troubling signs. In just 1 week ending April 30th, nearly $9 billion were pulled from the US stock market, while European and Japanese markets saw an inflow of $8 billion. Japan stood out in particular. It was their largest capital inflow in more than a year. Investors are not waiting for the US economy to recover. They are already pulling their money out. And this is not a temporary fluctuation. It's part of a deep structural shift. Part of this shift is tied to global long-term trends: the rise of emerging markets, the drive for regional diversification, and the emergence of new digital instruments. But even in this broader context, the United States is losing investor confidence faster than anyone else. What's even more alarming is that the money isn't just going to other stock markets. According to the same report, more and more capital is flowing into cryptocurrencies and high-yield bonds. That is, in fact, a dangerous signal. It means investors are losing faith not just in stocks, but in the entire American financial system. One of the main reasons for this loss of trust is political instability, and a large part of that instability is tied to President Trump. During his second term, he revived the aggressive rhetoric of trade wars, something most of America's international partners strongly oppose. He introduced new tariffs, reversed old policies, and plunged the country into an atmosphere of unpredictability and chaos. And as we know, markets dislike uncertainty. That's exactly what is preventing investors from making clear decisions today. People are reacting not just to the tariffs themselves, they're reading the deeper message. The United States no longer appears to be a reliable and stable partner. There's a growing fear that America might start using its financial system as a weapon, freezing assets, imposing political sanctions, or manipulating currency connections. This fear is what's driving money out of the country. The numbers speak for themselves. According to the US Treasury, foreign-held assets in America grew by $4.5 trillion last year, mainly thanks to the tech sector and electric vehicle companies. But now, that growth is reversing. Even a mere 3% capital outflow would mean roughly $1 trillion exiting the US economy. For comparison, the entire S&P 500 is currently valued at around $52 trillion. Losing $1 trillion would cause real shockwaves across Wall Street and global markets. And this won't be a sudden crash. It will be a quiet, gradual process. But that makes it no less destructive. There is another serious risk: the US dollar itself. Over the past year, the BRICS alliance has been rapidly expanding its influence in Southeast Asia. In early 2025, Indonesia became the first country in the region to join BRICS as a full member. Malaysia, Thailand, and Vietnam followed, becoming official partner countries. Today, BRICS includes 11 member states and several partners that together represent nearly half of the world's population and more than 45% of global GDP. This development is changing the rules of the game in the global economy. In the past, the United States was the central hub of international finance and investment. But now, as BRICS strengthens its position, America faces serious competition, not just in trade and politics, but in attracting capital. Countries like Indonesia, Malaysia, and Thailand offer growing consumer markets, predictable trade rules, and access to infrastructure funding through the BRICS New Development Bank, without the harsh conditions typically imposed by Western institutions. Meanwhile, U.S. trade policy continues to zigzag, from threats to impose 10% tariffs on all imports from BRICS countries to talks of 50% duties on goods from Brazil. This kind of instability scares investors. What used to be taken for granted, the United States as the dominant global economic force, is now under serious question. And this leads us to a harsh reality. America is losing its economic edge, and it may not be able to get it back. So the main question now is this: what will happen to an empire built on the dollar when the world stops believing in it? That's why you don't want to miss what comes next. Make sure to subscribe and turn on notifications. See you in the next video.